what does the way forward look like from here? Is the volatility here to stay, and will the market gains be capped here on? Let's understand the fundamentals. Joining me is Manoj Bahety, founder and fund manager at Carnelian Asset Management. Manoj, lovely chatting with you. It has been quite a roller coaster for the market right from April, ever since the tariffs were announced. Then we had the border tensions. Now this Middle East, flare up. But still we have climbed all those walls of worry pretty smartly. Even now we are just about sub 25,000. Not we haven't really tested April lows. So I want to understand your thoughts here on. Are we going to stay in this range, given the fact that we've digested all the negative news pretty smartly?
I think, first of all, good morning, everyone. Good morning to you and to your viewers. Thanks for having me on your show. So, first of all, if I would look the roller coaster volatility which was there, like since September of last year, we are seeing that there is series of geopolitical news which is causing the market volatility. I would say that if one looks beyond short-term volatility, market always gravitate towards core fundamentals. And if I would look at core fundamentals, all core fundamentals, especially for India, are intact now. So and means Of late, market has started reacting to the emerging geopolitical tension quite mutedly. Like earlier, it used to do a sharp reaction. So, in our view, even at current level, we see a good upside to the markets. If one look at core fundamentals or all core fundamental, especially of India, macro as well as the corporate earnings. In fact, the last corporate earnings season has also been decent. The Q4 corporate commentary, especially when they have started giving outlook for FY26, the outlook was much positive vis-a-vis the outlook which we have seen during last corporate earnings. So overall, our stand remains positives on the markets.
Okay, stance remains positive on the market. You know why? The auto pack is really rallying. Just reading some flashes on CNBC, Australia is being considered as a possible alternative to source rare earth magnets. I think this is what is firing up the auto index. That index, by the way, is up 1.2%. And as I mentioned in my market check, most of the gainers on the Nifty 50, the first 5-6 gainers are from the auto pack. Do you see this as a resolution to this rare earth magnet issue that has been plaguing automakers, and it was expected to boil into something larger than for the entire EV ecosystem? How are you viewing this rare earth situation, and with this news, can we expect some reprieve? Should one look at EV makers, or is it too early?
I think if one look at the impact of rare earth magnets, it was mainly going to have a significant impact on the EV side. And if I look at the contribution to the profitability of EV in the overall auto space, it was not that big. So, means, and many of the companies with whom we have interacted, they were having good amount of stocks of this rare earth mineral also. So over short term, anyway, the impact was not going to be much. Even on a medium to long term, the impact was more on the companies which were mainly on the EV side rather than ICE side. And with this alternate sources of rare earth mineral emerging, I think the impact which we were seeing even on the EV side, that will also get addressed. And lastly, if you see the kind of I would say that when China has started restricting the supply of this rare mineral to the world, I think it was more a symbolic, because there was a trade negotiation happening between two large countries, China and US. So it was more symbolic rather than having any medium or long term impact. So I do not read too much into this issue, because this issue is going to impact mostly the companies which were mainly on the EV side.
Okay. All right. But how will you play the auto space in that sense? Would you look at two-wheeler makers, given the fact that monsoons are expected to be good, and of course there will be an uptick in. There's already been an uptick, or we are seeing signs of uptick in rural demand, and then the whole tax cut that was announced in budget would boost consumption as well. So, would you look at two-wheelers in that light?
I think with the recent interest rate reduction coupled with expectation of good monsoon, definitely two-wheeler segment which was muted for some time now, this segment is likely to do well. Tractor segment is likely to do well, and
Hmm.
over next 3 to 6 months we are seeing good revival on the PV segment also. So overall, auto space along with the OEM manufacturer, we are quite bullish on the auto ancillaries also, which has got like
Hmm.
dual engines. One is that as the domestic demand of two-wheelers, PVs, tractors picks up, that segment is likely to do well. Along with that, auto ancillaries have got good export story also from India.
Hmm. Okay, that's about autos. But one sector that has been lending support to the market is IT. It has been seeing or witnessing consistent buying in the last 10, 11 sessions. Would you expect FY26 to be much better? Because the tariff situation is still playing out, and India may be able to, or maybe in the final stages of an early deal with US by 8th of July. Do you think all this bodes well? Is that what's leading to this positive sentiment when it comes to IT?
I think IT sector after the correction which has happened over last 5 6 months, definitely the IT sectors, few of the names have come in a good value zone, and this is the sector like which doesn't require capital for growth, the sector which delivers good ROCs, and as well as I think one of the thing which was impacting this sector was mainly the fear whether the US tariff issue, whether it can lead to some kind of recession in the US. I think that fear is still
Hmm.
persists, but mainly on the valuation side, we will be buyer in the select names in the IT sector, but we will be cautiously
Hmm.
optimistic on the entire sector, looking at that the global headwinds as well as the US recession fear are also not behind.
Hmm. That's true. The retail sales data that came out last night have led to recession fears in the US. But of course, we have the all important Fed rate decision tonight. Of course, he's expected to, Powell is expected to, hold interest rates
Hello.
steady. But given the kind of data that we have seen coming out of US, for the current year, how many rate cuts or when would you expect the first rate cut to come in from Fed?
I think means in terms of I would rather look at our domestic rate cuts than the US rate cuts. I think it will be a very complex scenario in US. It will be very difficult to predict because I think the current Fed has its stand very clear that they are going to give preference to the inflation over growth. The kind of inflation which the US was grappling with, the current Fed was not in the boat where they were inclined to do rate cut. But also, given the fact that the current Fed term is likely to come to an end, so it all depends upon that what stands the new Fed tax. But I would not would like I would not like to comment on the US Fed rate
Hmm.
cut probability because there are too many moving parts there.
Hmm. Got your point. But, talking about tariffs, yesterday we had Trump make a comment that pharma tariffs are coming very soon. We've been hearing about this, and again, yesterday he's reiterated that. And at the same time, we've had US FDA stepping up surprise inspections of manufacturing sites. This morning we also had Glenmark getting some observations. There have been regulatory concerns ongoing, right? So how are you viewing the pharma space given these headwinds? How would you play this sector, healthcare sector?
I think we are having extremely positive stance on Indian pharma, especially the CDMO API space. There we see that hello.
Sure, go ahead. We can hear you.
Okay. We are having a very positive stance on Indian pharma. In fact, three things one need to see. First of all, US as a country, they are having good amount of shortage of critical medicines. Secondly, if one look at the cost of manufacturing in US, it is significantly higher. And if one looks at cost of APIs and cost of CDMOs, it is just a percentage of overall cost of the final price of the medicines. So Indian companies, even if there are tariffs which are going to impose, Indian companies will be in position to pass on the impact of that tariff to their buyers. And we also have spoken to few of the large distributors in US. They were also of the view that in case if tariff comes, they will be able to absorb that tariff, and ultimately it will be passed on to the end consumers in the US. There may be some
Hmm.
impact on the specialty branded medicines if the tariff gets imposed. In that case, there may be like sharing of the tariff impact between manufacturer and the distributor and the end consumer. But so far as API, CDMO, and various intermediates are concerned, I think Indian companies are very
Hmm.
well positioned to pass on the impact of tariffs to the end consumer.
Hmm. Okay, got your point. Last few questions then, Manoj. Do you have any view on the shift in expiry days? In that light, of course, how one should really approach exchange stocks. Particularly, I know you won't talk specific stocks, but for BSE, a Thursday expiry, so to say, would impact market share. Volumes will get impacted. As a result, EPS will get impacted. The stock is, of course, reacting to this news flow as well. But your any thoughts on how this would impact, or how should one really approach exchange stocks now?
So, see, we have not looked at the exchange stocks in detail, so I would refrain from commenting on
Hmm.
that.
Sure. So, what are the key overweights right now, at Carnelian, and which are the pockets that you would say one should completely avoid?
So we are having overweight on BFSI space, especially
Hmm.
BFSI space. We are positive on tier one banks, which are having a good leadership team, good risk management practices, decent balance sheet, and a very strong asset quality. So we are having a overweight on BFSI, and especially within BFSI, we also like select NBFCs which have got a very strong liability franchisee. I think if we look at the BFSI space, there can be some short-term headwinds on the NIMs after the recent rate cuts which has been announced by RBI, because asset side
Hmm.
gets repriced faster than the liability side. But overall, because of this rate reduction, we see a good amount of traction on the credit growth, especially the credit growth on the mortgage side, credit growth on the personal loan side, credit growth on the automobile side. So with that credit growth coming back, we see good profitability growth runway for the banks and select NBFCs. So we are having a overweight on the entire BFSI space, and we also like the insurance space within the BFSI, especially the life and health insurance space, because there also we see a large opportunity, untapped opportunity, and there are select good companies. So this is one space where we are having overweight. Secondly, we are having
Hmm.
a good overweight on the entire manufacturing space. Within manufacturing space, we like, as I mentioned, we like the CDMO, chemical, pharma, healthcare space, and even select auto ancillaries, and as well as select capital goods and industrials. So within overall space, we are having overweight on BFSI and manufacturing as a whole. IT, we are slightly overweight for the reasons which I have just mentioned, that we are still cautious on the global macro headwinds. So IT, we are having position in select companies where we have seen good leadership change, and where we are seeing there is a good scope of margin expansion. So this is our
Sure.
overall strengths in terms of positioning of Carnelian portfolios.
And any sectors that are a completely avoid?
At this point of time, we are avoiding defense, not because I think their valuation has run away far ahead of the growth trajectory which we can see. So defense is one of the space where the other space within BFSI, we generally don't like the microfinance segment. So this is these and as well as I think select new age companies where the valuation does not reflect the earning growth potential, where valuation has run far ahead of the earning growth potential, where the cash flow trajectory is far distant in the future. So these are the few spaces which we avoid.
Okay, got your point. And lastly, what are your thoughts on China plus one as a theme? Because with the US speaking tariffs on China and the tariff differential with India narrowing, do you think the China plus one opportunity for Indian exporters could lose momentum? Your thoughts on that?
No, I think, see, if one look at the China plus one theme, it is not only the theme which has been pushed by the government. Even if we look at the global companies, the kind of supply chain risk which these companies have on China. In fact, this theme has started post-COVID. In fact, at Carnelian, we have also launched our specific fund to capture this theme, which is a shift theme, where we have identified this opportunity where many of the global large corporates were grappling with their supply chain concentration risk on China, and they wanted to diversify their risk away from China. And if one look at the kind of reforms which has happened in India over last 10 years, whether it is GST, RERA, bankruptcy reforms, PLI schemes, as well as the kind of tax swaps which the government has started offering to the new manufacturing entity, the cost competitiveness of Indian companies have have become even better than Chinese companies, whether one takes the labor cost, one takes the power cost, one takes the logistic cost. With all those things in place, and there is a global need of the companies to shift their supply chain risk away from China. So definitely in that, India stands at a very good advantageous position. And if I look at the kind of concentration which is in China, like many of the sectors, almost 35 to 40% of the global supply happens from China, where India is just 1-2%. Even if few percentage shifts away from China to India, it can double. It has a potential to double the entire sector for India. So this theme, we are going to see it as a decadal theme. And also, if one look at the tariff announcement closely, the kind of tariff which has been announced for India vis-a-vis the kind of tariffs which has been announced for China as well as other competitive nations, I think India stands at a competitive advantage even in terms of the initial rates of tariffs which has been announced. So all those things put together, we continue to maintain our positive stance on China plus theme. And we again reiterate, this is going to be a decadal theme, which is going to create a significant wealth creation opportunities, many of the manufacturing sectors in India.
All right, that's the overall view on the China plus one theme. But with that, Manoj would like to thank you for taking out time and sharing all your thoughts with us. Always a pleasure, and look forward to our next interaction as well. Thank you for joining in.
Thank you. Thank you. Pleasure interacting with you.